Welcome to the Wednesday blast of Tech Stocks Daily, your go-to spot for today's tech happenings with a twist. We've got a juicy lineup for you. Dive into Apple's mixed reality adventure as it tests its prowess in the volatile markets, and find out how Fortinet's cybersecurity game is flying high despite sparks of doubt. Hold on to your keyboards as Upwork pulls a fast one with soaring stocks, all while trimming its sails for efficiency. And if drama's your thing, stick around for the headline-grabbing whirlwind as Supermicro Computer navigates a sea of class-action turbulence. Ready for this tech roller coaster? Let's go. Hold on to your Apple Watches, everybody, because we're diving into the latest buzz surrounding the tech giant that's probably responsible for at least 5 gadgets within your arm's reach. Yes, today is all about the multi-trillion-dollar fruit company known as Apple, and there's plenty to talk about. First off, let's tackle the intriguing developments surrounding Apple's Vision Pro mixed reality headset, which makes R2-D2 look like an overpriced action figure. Not surprisingly, high-tech toys come with equally high prices, a cool $3,500. But here's where things get interesting. Apple is scaling back production of this futuristic gizmo. Industry insiders spilled the secrets to the information, revealing that the folks over at Luxshare, the ones assembling these bad boys, might take a coffee break as production could slow down or even pause by November. Apple is suspected of switching gears to develop a more wallet-friendly version of this headset, possibly eyeing a 2025 launch. Sounds like there's a battle royale brewing with Meta's headsets. But wait, there's more. Did your ears perk up at the word headsets? Well, let's shift gears to Apple stock and why some investors are feeling jumpy. Currently trading around $230 a pop, whispers suggest the stock might dip below the $200 threshold by year's end. Why? Because while Apple's popularity is toast with avocado, its financials tasted a bit more like plain bread lately. Revenue growth has plateaued, and with the lukewarm hype around the new iPhone 16, analysts have dialed back their expectations. The projection for quarterly earnings per share has slipped from $1.60 to $1.55. Can Tim Cook's trusty team turn it around, especially with Halloween night earnings looming like a ghost? And speaking of Tim Cook, he's on a charm offensive in China. The Apple superboss recently cozied up with China's IT minister, Jin Zhuanglong, in Apple's ongoing quest for global supremacy, or at least to handle some pesky local regulations. China, the sizzle to Apple's stir-fry, has been a hotbed for competition, much like trying to buy the secret Krabby Patty formula. Yet, Apple's latest iPhones notched a 20% sales spike during their early Chinese run. Despite regulatory hurdles, some might call these the Great Wall of Apple intelligence, Cook and his crew are eager to enhance Apple's standing in the world's largest smartphone market. Someone get those guys on an exciting episode of CEO Abroad. So there you have it. Whether it's Vision Pro prospects or juggling stock market zen, there's no rest for Apple. As they navigate headstrong decisions across finance, product phenomena, and international intrigue like a Mission Impossible plot, we'll keep our eyes peeled and our charging cords ready for further updates. Fortinet is making headlines today for multiple reasons that underscore its position as a leader in the cybersecurity sector and its significant recent stock performance. Let's dive into what's had everyone talking about Fortinet lately. First off, Fortinet stock is on a sky-high trajectory, having surged an impressive 45% over the past 3 months. Investors and tech enthusiasts alike are scrutinizing this leap, eager to understand the foundations of its sustainability and the long-term investment prospects. Fortinet's solid foothold in the network security market, backed by its robust integrated security fabric, continues to make waves among enterprise customers. Just how good are we talking here? In the second quarter of 2024 alone, Fortinet reported revenues of $1.43 billion, reflecting a year-over-year increase of 10.9%. Future projections are equally ambitious, with expected 2024 revenues nudging the $5.8 billion mark. Adding zest to Fortinet's upbeat performance is its relentless commitment to innovation. Their FortiOS operating system and cutting-edge security fabric architecture have helped the brand achieve considerable market traction by offering holistic protection across diverse digital landscapes. Sneak peek at the future. Fortinet shines its innovation spotlight on AI-powered tools, like FortiGuard Labs and FortiAI, a Gen AI assistant. There's no denying that their forward-thinking and hefty R&D investment put them in a sweet spot to latch onto emerging trends like Secure Access Service Edge and Zero Trust Network Access. But wait, there's more on Fortinet's busy agenda. Fortinet recently released its 2024 Security Awareness and Training Global Research Report, which shed light on a critical concern. Nearly 70% of organizations admit their employees lack fundamental security awareness. Yikes. Fortinet emphasizes the urgent need for cultivating a cyber-savvy workforce, boosting cybersecurity literacy as a first line of defense against increasingly sophisticated AI-aided attacks like believable phishing schemes. Steps Fortinet's taking. They're pledged to train 1 million cybersecurity specialists by the end of 2026. With more than 500,000 professionals already armed with newfound skills, Fortinet is on pace to meet its learning goals. This initiative addresses an industry-wide skills gap and fortifies Fortinet's talent pipeline within an expanding global cybersecurity market, expected to hit a whopping $500.7 billion by 2030. Of course, there are cautionary nudges from skeptics concerned about Fortinet's stretched valuation due to a potentially overheated market position. Consider Fortinet's forward 12-month price-to-sales ratio of 9.83, staggeringly high against the Zacks Internet Software Industry average of 2.74. Yet Fortinet's strategy remains strong, much like a cop with aviators in a high-speed chase, calm, collected, and focused on staying ahead with value delivery to customers, all while eyeing the ongoing digital transformation that ups the ante for tailored, wide-ranging cybersecurity solutions. In conclusion, between surging stock prices and strategic commitment to innovation and talent development amidst the dawn of digital transformations, Fortinet's got the cybersecurity spotlight firmly fixed on it, and deservedly so. Grab your popcorn. Folks, it's one thrill ride worth watching. Hold on to your keyboards, tech enthusiasts, because Upwork is making quite the splash in the stock market today. You might have noticed that Upwork's stock has skyrocketed, leaving investors buzzing like a caffeinated coder on a marathon programming session. So what's fueling this impressive surge? Grab your virtual popcorn and let me break it down for you. Upwork, our beloved gig economy trailblazer, has shared some pretty uplifting preliminary third-quarter results, and it seems Wall Street is loving it. The company published these results, showing numbers that left market analysts collectively raising their eyebrows and raising Upwork stock by a whopping 22.6% by 11 a.m. ET. Talk about a power play. First off, the company reported that their third-quarter revenue is hitting around $194 million, surpassing their prior forecasts and even smashing through the analyst estimates. In more relatable terms, they planned for a small party, but it turned into a full-on festival. That's good news for shareholders, who have been watching closely like hawks with high-speed internet access. Another spicy detail in this tech adventure is Upwork's non-GAAP adjusted EBITDA. They're projecting it to come in at $43 million, which again, leaps over their initial guidance. They've outdone themselves, accomplishing wonders in both top-line revenue and bottom-line operational efficiency. Erica Gessert, the company's CFO, essentially said they've been on their A-game, managing costs like a disciplined Marie Kondo of finances, not a cent unoptimized. This isn't just about today's earnings fireworks, folks. Upwork is making some strategic shifts for future-proofing its business. Buckle up for the headcount headlines. They're reducing their workforce by approximately 21%. Layoffs aren't typically associated with cheering investors, but here it's viewed as a pivotal move towards streamlining operations, boosting efficiency, and saving a sweet $60 million annually. Think of it as decluttering your workspace, but for a global company striving to flatten its team structures and add a sprinkle of automated magic to their gears. Additionally, Ernesto Lamina is stepping up as the general manager of enterprise, spearheading efforts to advance and expand Upwork's enterprise strategy. It seems they've got their vision goggles on, zeroed in on attracting larger clients and venturing deeper into broader market territories. And let's not forget their big plans in tech and innovation, targeting research and development for optimum impact. Balancing their product and engineering resources aims to enhance customer service like never before. Hayden Brown, their president and CEO, is confident this orchestrated efficiency symphony will keep them outperforming industry peers and thriving amidst a dynamic macro environment. So there you have it. Upwork's exhilarating ride on the stock market roller coaster is rooted in impressive financial numbers, strategic workforce streamlining, and a dash of visionary leadership, all adding up to investor excitement that's almost palpable. Remember to keep an eye on those official third-quarter results dropping November 6th. The Upwork narrative is evolving, and trust me, it's one worth watching. All right, tech fans, buckle up, and let's dive into this iceberg-sized scandal rocking the world of Supermicrocomputer Inc., or SMCI for short, as they seem to be channeling a plotline straight out of a corporate thriller. Grab your popcorn, because this isn't your garden variety news update. This is high-stakes drama with financial fireworks galore. Today, Supermicrocomputer found themselves embroiled in some rather choppy waters, taking center stage in not one, but multiple securities class action lawsuits. The backstory kicks off with the jaw-dropping allegations set forth by Hindenburg Research on August 27, 2024. They released a bombshell report titled Supermicro, Fresh Evidence of Accounting Manipulation, Sibling Self-Dealing, and Sanctions Evasion at This AI High Flyer. The title reads like the opening crawl of a villain's plot. Catchy, spicy, and a little bit terrifying. This report accuses SMCI of playing quite a few dirty tricks behind the scenes. We're talking about accusations of financial fog and mirrors, including over-reporting sales, under-reporting expenses, cozying up too close to related parties, and even breaking a few government embargo rules for exports. Imagine if they were competing in a race to cut the most corners. SMCI would be gasping through the finish line. As expected, the market lashed SMCI with the speed of an emotional roller coaster. Right after Hindenburg's reel of allegations unfurled, SMCI's stock got sliced like hot bread, dipping a sharp 21.16% within just 2 days. Ouch. Fast forward to September 26, 2024, and the Wall Street Journal spiced things up even further, spilling the beans that the Department of Justice is now involved. Nosing around to figure out if there's been any truth to all these fresh fishy skeletons flying out of SMCI's closet. Push enters, and the stock tilts again by another horrifying 12.17%. The kicker here is that we're also seeing a mighty collision of law firms on the dance floor, including Faruqi and Faruqi LLP and Khan Swick and Fodi LLC, two juggernauts usually in the field championing investor rights faster than a legal Pied Piper. They are urging anyone with financial stakes exceeding $100,000 to step forward and consider tossing their hats in the litigious ring as lid plaintiffs. Remember, the deadline is October 29th, 2024. Mark those calendars, folks. Now spill your thoughts in the comments below. Do you think SMCI is knee-deep in quicksand, or do you reckon there could be more to this tangled tale? Is this another reminder of corporate accountability, or just hemmed-in headlines with a spicy sauce of consequence hanging in the balance? I want to know what you've got rattling in those techie minds of yours. Get typing, and let's create a digital storm of discussion. All right, folks, let's throw on our analytical hats and talk about Upwork today. Given the recent news, you might be wondering whether to buy, sell, or hold on to your digital Rolodex of freelance dreams. Spoiler alert, I'm leaning towards a hold. Here's why. Upwork has had quite the eventful day, with their stock jumping a remarkable 22.6%. They've posted some buoyant preliminary third-quarter results, with revenues surpassing expectations. Plus, they're optimizing operational efficiency like Marie Kondo would, cutting down the workforce strategically to save a pretty $60 million annually. Despite this streamlined maneuver that's usually a little less cheery when you hear about layoffs, investors are cheering Upwork's proactive approach. Plus, they're advancing in tech and innovation, aiming to bolster client relationships and deepen their reach in the market. Sounds promising, right? However, while today's uplift is incredibly alluring, this kind of stock jump can entice premature euphoria. Seeing substantial gains in such short bursts might lead to expectations that fizz faster than an open soda bottle, so caution is always key. The flip side of that joyride involves considering market stability, competition in the gig economy, and future earnings to discern if these gains hold long-term gravity or float away like a helium balloon. So, I suggest holding on to your Upwork stock for now. Let's observe how these quick turnaround strategies play into their November 6th official third-quarter results, and if they ride this momentum stream rather than just a singular wave of optimism. Remember, folks, never forget to do your own research and consult with a financial professional. Investing is as much about the adventure as it is about your hard-earned dollars. Keep informed, stay savvy, and let's see how Upwork's leap unfolds. Today was a whirlwind of market activity across the tech sector. Apple is juggling high-stakes product pivots and international diplomacy while trying not to drop the value of its stock like a hot potato. Fortinet is soaring as a cybersecurity trailblazer, although some might say they're flying close to the valuation sun. Meanwhile, Upwork has surged to new heights, carving a path of streamlined efficiency amidst positive financial forecasts. On the flip side, Supermicro Computer finds itself in a turbulent maelstrom, navigating through a series of lawsuits that could spell trouble for its future. From skyrockets to scandals, it's all happening fast. But that's what makes tech such a thrilling theater. Remember to hit that like button, subscribe for more deep dives, and share this video if you found it enlightening. And join us again tomorrow for another rundown of the top tech news.